Hey everyone, just wanted to jump on. Bitcoin it just broke 40,000 today and kind of wanted to circle back really on my last video. I should probably have rewatched it so I could address a couple of things, but let's just jump straight into a couple of the important ones that I want to address first. So first of all, we took off here, created a gap. I mentioned this in the last video that we needed to fill this gap. Interestingly, look what happened today. Ta-da! Filled the gap. Just like always, like I said, not always, but 90% chance of filling the gaps, they do get filled. And so this one from back over here got filled, and we said that really there's really no open gaps here, but we still have this really low open gap from 20,000. I don't think that's going to happen anymore based upon our new consolidation range. I think 30,000 is probably our new low if we're going to see a new low, which is kind of interesting. But first things first, this price range of 38, 39, 40 is going to be pretty hot little area. So kind of wanted to dig into it. So kind of jumping over here, this is a little bit gnarly of a chart because I got so much stuff on it, but we've been in this channel going up and down, not a surprise here. And literally been just waiting to break out, right? One way or the other. Either it comes up here and then breaks out and we go north, or we kind of come back down and break down, and that's obviously what we've been looking for. This little turquoise box is the same channel. The question is, now that we've fulfilled this, does it go ahead and break up? I think it's more likely that we're going to break down. After this channel, this should go up a little bit, and then ultimately we see a little bit more of the downside. You can see that more if you look at this over here. If we go to the on the Binance chart, if we kind of zoom out a little bit more, we have this extremely long trend line from down here. So I literally have right in here, and I'll try my best here to make it big. Here we go. All right. So Bitcoin fell down. Follow my mouse here. Jump, 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 jump. Okay. Now we're at a support until we break that support. And now we're below support. Then we come up, and now it's resistance. It's the same conversation over and over, folks. Now that we break up, and same thing until we break down. And now that we're down here, we've got to go up. We've got to test, the support has been broken. Now we're going to create resistance and check resistance. Now that we come down, same thing. We're looking to break up. Now that we're breaking up, interesting lines here around $38,000. All this consolidation, I think, is where it's going. Right around $38,000. That's our first stopping point. And then from there, we'll see where it goes. Like I said, I think $30,000, all this range down here, we'll call it $32,000 is one area, but ultimately I think 30,000 being a nice round number is going to be our ultimate. Wicks down to 30 grand, and then it's all over. And then it's just up from there, basically, because the halving's coming. So long story short, really kind of coming back to it, really kind of testing resistance a little bit here, ultimately breaking through due to the ETF news. Now have support on top of that same exact line, right? Nothing's changed. It's the same line. And it's just a matter of, can we hold this and go up, or are we kind of going to break down? I kind of told you way back in here somewhere, I don't remember where, maybe when we crossed 40, that $48,000 to $50,000 is kind of our level to reach. I had shorts in a little over 45,000, and that has it's obviously in profit now, but you can kind of see that all this consolidation line around 45,000 is kind of the mark for me to watch. But we did go ahead and get up to 49,000, at least on Binance. The high was $49,022.57, as you can see kind of up here when you're hovering over that candle. And so just wanted to say we have achieved that mark. And so this is extremely overbought, all this ETF hype. And when you look at it, ETF was just an absolute giant meltdown. Nothing really good came out of it. It's been pretty freaking boring. And now who's selling into it? The institutions. And so that means that all the buying pressure is gone because we didn't go ka-choo off into the moon. And so again, we would have hypothetically done that in theory had we not had all this additional hype buying pressure. But like I said, it was very clearly priced in due to the amount of price action going up, not to mention all of these wicks. I mean, how many times did it try to sell off and get bought back up, bought. The whole freaking time. It's just constant. Won't let it go below this $41,500 range until today. And they were just like, all right, the buyers are done. It's just sellers only now. So let's see what happens. I do think the next targets to watch are the top of this consolidation range right here, 38,000. Pretty clear range. What makes the most sense too, especially with this long of a trend line, is just like before, right? We were on top, now we're on bottom, now we're on top, now we're on bottom, now we're on top, now we're on bottom. So in order to make that work, really the way that it has to happen is we might come down and test this 38, but before we do that, or maybe during, right, it might come down here and touch this first, or it might come up, create a like double check the resistance area, which would be maybe 45,000, and then all of a sudden we go back down for a little bit. Like I said, I don't foresee this being some super long-winded, you know, this isn't a bear market. We're not going down for the next 6 months, but we've had this basically unanswered move up from the $25,000 range up to 49,000. Whereas like this is extremely unstable. So we need to retrace to a certain level to kind of give buyers a chance to really restabilize. This is the most logical area right here. If I take this and ooh, come on, can he do it? There we go. We'll kind of bring it over here to roughly $30,000-ish. Let's just change these numbers really quick. We can keep it at 31,000. That's fine. It doesn't really matter. It's going to be that ballpark. As we get closer, we can obviously talk about it. But I think it makes the most sense to, we've got to test this confirmation. It's completely untested. So I think 38,000 is a no-brainer. The question is, after that, does it hold and come down to 35, which is a nice round number. Plus, we've got consolidation all throughout here. So 38, 35, really 34. And then we're going to see kind of down into this consolidation. So, and then after that, it's just simply a matter of the halving, which is going to be in April-ish, which is going to be somewhere right around here. And let me do a little Alt-H. Whoops, that's not right. And I meant... let's see, it's horizontal or vertical. So we need Alt-V. And of course it's in the wrong spot. So kind of screw that back over. Somewhere middle April-ish. Doesn't really matter for this conversation. So literally somewhere kind of around this white line is when the halving is going to be. So that's kind of what I'm expecting. I'm expecting a little bit of a retrace, at least to 38. We could see it all the way down to 30 by then. And then from there, it's just taking off. The other reason I say that, not that I have the charts pulled up, I just didn't have time to do so. But if you looked at on a weekly chart, let me find something cleaner. Good grief. If we looked at a weekly chart, what do you see? Holy cow, that's a lot of lines. We see a big pump up in the bull market back over here in 2017, a sell-off, the ultimate bottom, a big pump up, and then a new sell-off. So if I scroll that down a little bit, what do we see? The bull market goes up, it comes down to here. We have our ultimate bottom, then we have a big pump up. That's this right here, right? This is what is known as a bull trap. So it traps everybody in here, comes back down, and then ultimately takes off. Now this was the COVID low right here, happened to retest that $4,000 range. I don't think we're going to come back down and test 16,000. That would be way too lucky for me. But it gives you at least an idea of patterns and how people behave. And so it's really not like that out of the question to run up, just like we are over here. This is matching this over here. We sell off a little bit, probably not near as far down. And then what happens after the halving? Bam. So it's going to be a fun couple of years, folks. Hang in there. Very, very excited as always. And really can't wait to kind of keep this thing going. Like I said, you know, the narrative hasn't changed. Same thing as before. We said 48 to 50. You could see this giant wick creating this shooting star candle, a very bearish candle. We kind of really never confirmed above it. We would need a close above this to invalidate it, and that never happened. So as of right now, the day, oh, that's actually a good point too. Check this out. Yeah, this will be interesting to see. And without even looking, I almost guarantee this is how it's going to look. So if I look at a daily candle right here, this is the high right here. And what is it? It's got a big wick on top. See how much of a line that is, and the body's way down here. Now let's go to a weekly candle. What happens? Same thing. On the weekly, it's got this big tail up top here. Now if I go to a monthly candle, exactly. That's what I thought. So it's basically a giant shooting star candle, which is a very bearish thing. So really what we're seeing on a monthly candle, where each one of these is 1 month, we see a very sharp bearish approach here that, you know, if we don't confirm back above 42,000, let me just do this. The close was 39,000. So we got to close above 40,000. I'm sorry, open 42,400. We've got to close above this for us to go up again. So right now, if I go back to the daily candle, what I'm looking at is after this giant candle here, I'm looking for confirmation to go down, which means that this candle right here, or the next one, or the next one, or the next one, we get a close below where this one closed. And if this one closes below this one, then this is confirmation that we're going down. The only way to break that is this would have to go all the way up, what's called a bullish engulfing candle, and it would have to close, meaning the green box part has to end above the top of this red line, 41,600. So it at least gives you a picture of kind of really what we're dealing with technical analysis wise. Again, the cool part about markets is that it's run by humans. Human emotions never change. I'm not saying anything, excuse me, that you've never heard before. So, you know, it's just the same story over and over again. This is why I like trading. This is kind of the fun part. And so, you know, it's an opportunity to accumulate when we can, but also kind of understand not to panic if it starts going down. A lot of you got in at this range, maybe lower. Some of you bought, you know, as always, everybody always wants to get in when we're up here. And they call me and they say, Brian, I got to get into this Bitcoin thing. How do we do it? And I'm like, well, I mean, this is how you do it. You know, better now than never, I guess. You know, I'm not going to convince you to do it when it's down here. Trust me, I've been preaching for years about when to do it. And even some of the people that I talk to in the 20,000 range, you can go look at all my videos. I say anything under 22,000 or really 20,000 is going to be considered a bargain, right? Because that was your all-time high from back over here. So it's really just a matter of understanding human emotion, understanding really it's the same cycle over and over again. So I'm excited. It's going to be a fun couple of years. 2025 is going to be the year I think we're going to reach our all-time high sometime later in 2025. We'll rock and roll from there. Just a little bit of an update. Had to chime in. Hope you're doing well. Take care of yourself, and we'll see you on the next one.